Hey everybody, it's Pete. Good morning. It is Friday morning, March 19th, 2021. Thank you so much for joining me on today's episode of today's best stock picks. A little bit of a pullback in the market. We're going to talk about bank stocks and relative strength stocks today. That's really going to be the focus. We have roughly a dozen stocks that we're going to touch on today, some of them breaking out. We actually have one stock that has gotten hit pretty hard over the last, let's say, 2 or 3 weeks. But we're starting to see signs of accumulation, starting to see signs of the smart money dipping their toes in volume spikes, despite the fact that the stock is on the way down. It's not a buy yet. However, these are the clues that we need to start to notice if we expect to sometimes just get amazing prices and get in before the mainstream media starts to catch it rallying in the other direction. We want to talk about the market pulling back a little bit. We want to talk about the day that we had yesterday where a day after the Fed and the market pushed to new all-time highs, we kind of opened neutral yesterday. It looked like we were going to just open flat and then rally again. It just didn't happen. But look, I want to pull everybody off the ledge. Most people that enter our universe, enter our community, the boot camp specifically what I'm talking about, amazing people. I'm just so proud and grateful to be a part of that community. And maybe if you're watching this right now, maybe you are in the boot camp with us. So I hope to see you on the other side if you're not. However, a lot of them only started trading a year ago when the market did nothing but go straight up. Granted, amazing time. We were saying it was a glorious time to be a trader. Very few pullbacks, and those pullbacks really didn't feel like anything vicious. They were just kind of like, all right, it went down for an hour and then we started to rally again. The market's changed. This is not March of 2020 anymore. We're in a different world. We're in a different situation. Interest rates, which we're going to talk about in a second, are still low, but there's a lot of conversation about interest rates changing. So the pullback in the market is a natural function of profit taking, regardless of the reasons. Regardless, there's hyperbole out there talking about these. We're going to crash. Let's take it one day at a time. Let's take it 1 week at a time. Look, if you've read Reminiscences of a Stock Operator, I'll hold it up there for a second. Whether it's that book, which is, by the way, if you're watching this video right now, I would strongly recommend you buy this book. It was written in 1927, and it is the #1 book for any active trader, especially stock trader, because it focuses on stocks. It gets a little bit into commodities. But pullbacks, they're expected. They're natural. The market's letting off steam, and then it catches a bid and starts to move again. The circumstances have not changed dramatically enough to say, oh my gosh, we're going to have this gigantic crash. Have circumstances changed? Yes, but they're getting back to normal. So if you're watching this now and you're like, oh my gosh, we pulled back, oh my gosh. If you're a swing trader specifically, if you're in this if you're not a day trader and specifically a little bit longer time frame, fight the urge to start trading for pennies when you really should be trading for dollars. Fight the urge to be catching these little blips because you're afraid the market's going to turn around. We talk about it all the time in the community. Your #1 job, the easy #1 priority you have is finding good ideas that match your personal criteria. And for the most part of in these videos, we're talking about swing trading ideas that you could still day trade, but we're focused on a little bit longer time frame. So don't change your trading strategy, your trading concept, the goals that you have for the stock market because we pulled back. Fight the urge to catch this little blip and make 50 cents here or $1 here. And I know that sounds crazy to some of you who have a full-time job and that's not what you do. However, you'd be surprised at the emails and the feedback and the comments and the messages that I get. Should I just start scalping? Should I just start taking these quick profits because the market's is heading down now? And the answer is no. The answer is don't chase pennies, chase dollars. And I just can't express, even if you're day trading, but we're talking a little bit more specifically on a little bit longer time frame. So I just want to throw that out there. Something else that's going on is quadruple witching for options today, which I'm gonna put a link in the description. That is really, it's from Investopedia, and they do a great job of explaining what quadruple witching is and why you need to pay attention to it. Again, I've mentioned all week this week that options expiration and FOMC are 2 days in my personal trading plan that I kind of lay back and I don't trade as aggressively because of how much stuff is going on behind the scenes. So we're going to get right into it. Remember, the theme of today is relative strength. We're going to take a look at the futures, which are actually slightly positive today. A big thing to pay attention to right now as well is if you are following the S&P futures, we're shifting over from the March contract to the June contract. All the volume is starting to go into the June contract. So just a quick note, if you find these videos helpful, definitely click down to subscribe. I'd really appreciate it. We're also doing intraday shorts. They're called YouTube shorts, where I'm popping in the middle of the day and doing these one-minute videos to give you updates from my trading desk, which is kind of cool too. So look for those. And if you have any comments on those videos, they're really more about real-time ideas that I'm looking at. Definitely give us a thumbs up so you make sure that you get the updates on those too. They'll pop up in your feed. So let's head on over to the screen. We're going to actually take a look at starting out here with the quadruple witching, so you can see that it actually happens today. There's option expiration, and then there's quadruple witching, which is happening now. So I'll leave this article below. You can take a look. I don't want to get into all of that right now. So the futures contracts, you can see here the March. If you don't know how futures, specifically the S&P futures trade, it's every quarter. So there's March, June, and right now the March contract, which you can see here, you can see the volume drying up dramatically. And that means that we are now going to be moving over to the June contract where you can see all the volume is. So just make sure, it's a common thing for newer traders or even experienced traders really, who just forget that the volume shifts over as the contracts expire. So make sure you're looking at the June contracts there. So obviously bond yields are the number one thing that everybody's focusing on right now. Bond prices going up, bond yields go up. So this is the number one thing. You should be watching this right now, whether you're a day trader or quite honestly, things are changing so quickly, even intraday. We're commenting it feels like sector rotation is happening by the hour. A little bit of an exaggeration, but it certainly feels that way because you go into the day and you really want to be planned and you have your ideas. So keep an eye on this. I'll post this link as well. It's a really good explanation from Reuters about the stock market, bond yields, and how they affect each other. So now we're going to get into some other conversations, which is talking about bank stocks. We're going to specifically be talking about JPMorgan, Goldman Sachs, Wells Fargo, Citigroup. We're also going to throw Morgan Stanley in there as well. So obviously the Fed, the term dovish, juices bank profits. So we're going to stick down this. Jim Cramer, obviously here you can see, did a video yesterday. We're going to dive a little bit deeper into what relative strength means. We're going to show you signs of what it would need to look like, and we might be seeing it in a couple of the bank stocks, of what it would need to look like for us to say, okay, we might want to trail our profits up on that. And I want to give you a clue here. This is FinViz, right? So we had a good question by Jeremy yesterday in our community about, obviously we watch the charts quite a bit, right? And you assume that a lot of this data is priced into the charts already. But the stuff down here matters too, where you're looking at earnings per share year to year and move yourself across, right? Earnings per share sales. But this is really the one that if you're what we might call a growth trader or a growth investor, earnings per share quarter to quarter up 47.5%. That's a big deal. That's really what we're focusing on right now is the current environment. So if we hop on over to JPMorgan, you can start to see that, and let's actually pull this up here. We've been talking about this for quite a bit. The 10-period moving average in my universe in order flow and tape reading is what we call the momentum moving average. As long as it's above that, the current price action is relatively strong. As a matter of fact, very strong, as long as it continues to close above that. And you can see only this one time here, and just basically for a blip, since the beginning of February has JPMorgan closed below the 10-period moving average. And it's a simple period moving average. I get that question all the time. So as of right now, the bank stocks are still showing terrific strength. They're showing terrific order flow. They're showing terrific momentum. The tape, however, might be changing. Might is the key word there. So remember, everything that we talk about, I just want to come back to the screen here really quick, to be somebody who's not just a chart reader and struggling and make that leap to the next stage where you're now reading the tape and building an argument for a great trade, which again, if you want to make the investment yourself, click down and learn about the boot camp. You need to put price action and volume together and risk reward and probability. All of those things make great traders. But what we're talking about here in the bank stocks, and specifically we're going to be talking about JPMorgan and a few of the other ones, we're going to put price action together with volume and start to see if the picture's changing. We just said relative strength is great. If you happen to be long, the current momentum, the growth in the current quarter is amazing. But what do you need to see for it potentially to be changing? What do you need to see for maybe your spider sense tingles and all of a sudden you say, oh, you know what, maybe I might scale out a little bit. Maybe I move my trailing stop up a little more aggressively because you're building the argument because something changed. Doesn't mean you get out because there's that bullish echo where it continues. I'm going to show you what I mean now on the JPMorgan chart because it's screaming, okay? Now, you can see here, if you just looked at the price action, like this is awesome, new 20-day high, broke through, so what, it closed lower, the rest of the market closed lower too. But look at the volume. We actually exploded through and pulled back. Now, that's good if we follow through and have another well-bid day. Remember, well-bid is higher highs and higher lows. What does that represent? Well, smart money is holding prices up and paying higher prices. Whether it's happening on the daily chart is great. Whether it happens on the weekly chart is better because that's 5 days of buying. So if we look at JPMorgan and we look on the weekly chart, you can see here 1, 2, 3, 4, 5, 6, 7. 6 out of the last 7 weeks, the stock has been well bid. Now we drill down a little bit deeper into the daily chart. It's looking a little bit messier. We're not seeing these clean look. And again, just look at this really quickly. Look at these clean green candlesticks and a nice clean pause, closing above the open with consistency, closing higher highs and higher lows. And now the last few weeks, although still going higher, we're starting to see a lot of melted candles, which means indecision. Melted candle is open and closing in the same place, indecision in that time window. And you can see, look at all 1, 2, 3, 4, 5, 6, 7, 8. 8 out of the last 9 trading days in JPMorgan with the volume spike showing indecision. It's not showing that same open here and close up here. Something is changing a little bit. I'm not saying get out, but a lot of the news that we just talked about with interest rates and quarter over quarter, it's priced in right now. Do you get out? No, it means that you look at the data, you look at the information, you look at the tape, you build that trade, and you say, you know what? Maybe this 2-month run is starting to play itself out because that's based on where we are now. You bought 2 months ago, and now where we are is already priced in. So now you're buying the next 3 months worth of data. So smart money is doing something here now. It's our job to pay attention to whether or not those daily charts remain well bid. So along those same lines, we want to take a look at Goldman Sachs, and you can start to see very similar charts. Excuse me, Morgan Stanley. You see the differences between those large green candles and the clean push higher. Wells Fargo will be the last one that we take a look at here. Wells Fargo actually did close above the open. So maybe, again, just quickly identifying it, relative strength to the market. A couple of other stocks I want to take a look at today. QFIN. Excuse me. Good relative strength, really good clean 20-day breakout with the market pulling back, closed above the open, closed above that breakout, and increased volume. Watching this one here as well. Excuse me. Ride is the stock that I mentioned before that was pushing down. What's interesting here is clearly you can see Ride is on the opposite side of the tape right now, where it's below the 10-period moving average the entire time. But again, putting the pieces together, a big gap down, massive volume spiked in there, another gap down, more volume spiked in there. So what do? How do you use this information? That's where, that doesn't mean you buy it there. You need to know where smart money is starting to step in. So what you do now is you take your horizontal line and you make a note of $14. $14 right now, $13.92, $14. I'd like to round things up. That's the level we now need to see Ride close above with a large green candlestick with increased volume, and we're going to start forecasting that the smart money stepping in, and that's going to be the bottom in Ride. Let's keep an eye on that one together. VUZI, really good clean breakthrough again. The stock trades a little bit thin, a little bit better of a swing trading stock. But again, what do you want to see? What don't you want to see? We saw good volume here. We saw it actually close above the open and have a new 20-day breakout. So meeting all of the criteria you have there while the market got pounded yesterday. Again, Met, look at that, really good clean breakthrough as well. A little bit different from what we saw in the bank stocks in the sense that this stock actually closed above the open. So very similar stock to what we saw in Wells Fargo before. And PM, I guess a lot of people are smoking a lot more now. Philip Morris actually spiking to the upside as well. We had a couple of stocks that were requested to speak about. AFRM, I just want to make sure that it meets the volume criteria of what we trade. So again, meets that criteria. Look, bottom line is we're not seeing accumulation here right now. It's below all of the key moving averages, especially that 10, which right now it has bearish momentum to the downside. Maybe yesterday was the first sign of accumulation, but right now I don't see anything to do there as far as buying. And similar with AI, neither one of those stocks right now are meeting the criteria. At the very least, you want to see the stock eventually go well bid with higher highs and higher lows on the weekly chart, which means now over 10 days, something changed. Higher prices were being paid, holding the lows to higher lows. What we can say, though, is we are starting to see, look at the difference. Look at the difference in this volume on the way down compared to where the stock bottomed. Again, very similar to what we just did. Around $90 is where the smart money, maybe 95, started to increase what was going on. So now above 90, 95 would be where I'd be looking at that idea as well. So it's been an exhausting week. I just want to start out saying again what I started out with yesterday, this morning. That's how long the videos are getting in my mind, right? The weeks are getting. Pullbacks in the market are a natural function of the market. Don't panic. Don't change your concept. Don't chase pennies. Don't trade what you normally do. Don't change your objectives because the market changed. Change how you're applying it. In other words, stick with what is working. And if you happen to not be getting great ideas right now, just step back and say, these aren't what I'm looking for, so I'm going to step back. And the reason I say don't chase pennies for dollars, and you should be chasing the dollars instead, is because it becomes a bad habit when you're going quick profit, quick profit, quick profit. And then when the market turns around and starts to pick up again, you're taking quick profits and you're leaving all that money on the table. So thank you so much for joining me today. Let's have an amazing day. Look for a quick YouTube short for me in the middle of the day today again. Definitely click down and subscribe. I'd really appreciate it. And if you have any questions about what we talked about today, leave a comment. That stuff that we talked about tape reading and combining price action and volume, risk reward, all of that stuff is really fascinating stuff. So let me know if you have any questions about that too. Have a great day, everybody. I'll speak to you soon.